the NASDAQ, and the QQQ. So the market should run up to 12 o'clock, I would think, based on what I'm looking at. And what I'm looking at is pretty good, Chuck. When you sit here and look at it, uh,
Yeah,
stocks
Tom.
that took. I'm
eh,
sorry,
I
stocks
was
that took off this morning. Amazon, if you go look at Amazon, it hit almost 135. And now Nvidia's finally got life in it. Apple's come back to play. It's above its opening, 68.44. So that's looking pretty good. And looks like some with the QQQ at 617.22 area. It's a couple points above its opening. So that looks positive. I think thing looks pretty positive to me. What about you, Chuck? What's it look
Yeah,
like
I
to
was
you?
I was going to say one of the real interesting things to me is that when you go back to that Friday session, I know we were, talking about much broader things, but during the market, the high of RB3 was 68.44. I know how much you love that 45 number. We get RB3 at 68.44 again today. I think you've got a great resistance level right here. And if the market breaks it, you always talk about the penetration bar and the confirmation bar. RB3 penetrated into the buy zone with that high of 68.44. So I am really watching closely that level to see if the market's going to make that next step.
Why don't we go to a live market? Put the dashboard up there with the 10 tickers that I gave last night, Chuck. I can read them to you to make it easy, but we also need, the e-mini and those things. Let's go to a dashboard, live dashboard to kick off, and I'll call out the 10 tickers to you.
All right, hang on one second.
This will be this week's 10 tickers, folks.
Yeah, let me take over the projection again and let's go in here and see what we got. Got a bunch of stuff in the way. So over into the dashboard, and
why don't you just start fresh for this week, if you will, and I'll just give you the current 10 tickers.
yeah, let me get our stocks out of the way here, and we'll come back in. We'll leave the futures in there.
Yeah, Apple.
Let's see. All right.
Amazon. MU. AGQ. Diamond. GLD. Google, GOOG. NNE. NVIDIA. And then I got PAAS as my 10th one. Okay, so if we blow that up and look at it, let's just see where we're currently stand. You got silver's running, AGQ's running. Look at AGQ. I had a breakout on AGQ at 110.55. Current price is about 112. That's a good Monday. NVIDIA,
that's a
confirmation. I said it had to get above 185. I had it up there a little bit. I said, show me type market. Yeah, that's sort of the way it stands right now. I was looking at the current market, and we're looking at about a 32 on S&P. My pivot number today was 35, 68.35. So
let's add in an S&R line here.
and explain what you're doing, everybody, Chuck. I know you assume everybody knows, but I've been following you for all these years, and I'm trying to figure out what you're doing.
So basically, let me show you on this other S&P chart, which is a basic compass. If you've got a number in the market that you want to pay special attention to, you can actually draw a line into the chart. So to do that with anything within Roadmap, if you're trying to do anything, right-click menu is generally going to show you everything you need to do, right? In this case, we're wanting to add something onto the chart. So That first option there, add, is where we go to find out, well, what can we put on the chart? Now, a trend line will go from like a high to a low. You can draw it. It moves diagonally, right? So you don't get an actual straight horizontal line. For a straight horizontal line, we can either use horizontal lines which specify open, high, low, midpoint, or if you have a particular number you're interested in, go right above that to S&R line, support and resistance line. And this is just going to be a horizontal line that you can plant. So we'll select that, and I just click in the chart anywhere I want to place it. This one just popped in here as I clicked into the chart. But what we do is go up into our chart objects option. And if you don't have your button bar on your chart, you can right click and go to show. Chart objects is also there. So we'll select that. And I'm going to come up to that S&R line. I'm going to change the properties on this and make sure I've got it at the right spot. In this case, 6835. Line width, set that how you want it. The color, you want something that's going to stand out. And we'll leave that without a regression channel and just go ahead and click OK. And that puts that S&R line right there at the 6835 pivot.
Yeah, by putting that pivot number there, it sort of tells you the current market state. That's what I like about the pivot number, because we're 68.35. However, the market, clearly, AGQ is broken out here, and I think it's just a matter of time, Chuck. Give it a little time.
I think
let's go to our slide presentation. Jean Marie said you went too fast. Go back to it one more time. I want everybody to know how to do this.
Okay.
Step by step. Step
right.
one.
So first of all, let me go ahead and remove that, and I'll just go into the chart objects and select delete. That takes that line out. So let's look at putting it back in. We're going to right click, select add. On the add menu, go to S&R line. Click that. And then we have, you notice the cursor turns into a little hand, a little pointer. We're going to point that finger at the 6835 area and click into the chart. Now I want to make sure I have the price precisely correct. So I'm going to come over and go into chart objects, select the S&R line, click on properties, and I'll type the line in, type the price in just to make sure it's precisely correct. Click on OK. It shifts just a little bit. And there you have it, the 6835 pivot number drawn on your chart.
Got it, Jean Marie?
Yeah, so there's a question about, can you label the line? It actually is labeled. It's hard to see. Maybe need to talk about being able to change the font on that. It does actually say 6835 right there. Just when the compass panel is out, it's hidden behind that compass panel. How do you delete old S&R lines? Select chart objects, and anyone you want deleted, select it, click on delete. All right, so we all set on that? Can you make the new lines as defaults? You can, the new lines are not necessarily, the line, if it's in your chart, it'll stay in your chart. However, in terms of the default settings, that's for the color and the thickness of the line. So the price itself, it doesn't default. You'd have to actually change that.
Hey, Ernie, and everybody else, that if you're brand new to Roadmap, on Tuesdays and Thursdays from 4 to 4:30 Eastern Time, that's 4 p.m. to 4:30 p.m. Eastern Time on Tuesdays and Thursdays, when I have time, usually I do this roadmap afternoon training to answer just questions just like that. So be sure to tune in this week. We'll have should have 2 sessions this week, Tuesday and Thursday from 4 to 4:30. Happy to answer all sorts of questions like that. And for now, Tom and Chuck, let's should be sharing my screen now with the slides. We can move on with today's presentation.
Yeah, past performance is not indicative of future results, and we know about that. However, if you were there Friday with me, we've already started banking some profits from our live trading that we did, and we got more to come. It looks good to me. Good positioning on the trades. I like the way. I think everybody said the way we did that by separating the trades, diversifying the trades over the course of all day Friday was a good way to do it. And I think that if you wasn't there, we'll play the tape in a little bit, let you listen to it because it's pretty exciting to listen to. So let's keep going. In my opinion, market opened the month at 68. I think it was about 68. Just be a monthly open. 68.54. Let's just make it 68.55. What do y'all think? 68.55 is our monthly pivot. Keep it simple. 68.55, and that's what we'll do. 68.55 for our monthly open here in December. This is something that comes out today after the close. It's our annual newsletter, 1 year access to it for $9.99. What we try to do here is recap everything we've learned from Sunday night to Monday, highlight it, and any special opportunities we see. Our membership's growing by leaps and bounds, so get part of it. It's $9.99. Train and trade. This is where we're at here on Monday, 11 o'clock. Just keep in mind, we'll be with you today at 11. And then tonight at 7, we have futures first. At 8, we have a special broadcast. At 9, I'll give you my future of the week to play. After 9, using the Delta strategy that we've incorporated. I think people like it. We'll do it. Full day for us. Reminder, all trades done through Train and Trade show up in T-Buzz Talk and Trade. Simple to read format. The trade we follow along in there, dtitrader.com/TNT. We do have a special running on that you'll hear about in a second. So hold off if you want to join until we get to the special. Language of the market, today's talking. I find that people that's been in the business a long time assume everybody understands the language. So today, what we're going to do, I'm going to have Jonathan go through what we believe is some of the key language of the market. And then this will be a resource for you if you got any questions in the future. So that's our approach, talking about the language of the market. For example, if I say trigger, what do I mean by trigger? Or if I say pivot, what do I mean by pivot? Now, around 75% of all stocks will follow the S&P 500. That's a rule that's worked for years, and I'm going to let Jonathan take it over from here.
All right, so knowing that insight, what are the S&P vehicles we can track? Well, if you can track futures, track the /ES or the /MES. That's the S&P futures /ES, and the /MES is the micro futures. Now, if you're on Thinkorswim, you can just type in /ES and get a chart. If you're on the roadmap, of course, you need to label the contract month and year because futures work somewhat like options. They have an expiration, so keep that in mind. Everybody should be able to look at the SPY ETF, though. It's a good one, SPY, or one of the cash indexes, SPX for the S&P cash, XSP for the mini cash. And if you're on the roadmap, it's going to be $SPX or $XSP. So keep that in mind. But those are the main S&P vehicles. There's other ETFs, of course. But these are the main ones we follow here. All right, some option transaction types. And these abbreviations are important if you're in any of Tom's services. We use it in the texting to keep the text a little shorter. Buy to open is BTO. STC is sell to close. So anytime you enter a long option position, you're buying it to open. And of course, anything you buy to open, the way you close that is you sell to close. All right. Notice the other side of the transaction, you're buying to enter, you're selling to close on those two right there. Then you have the flip side where you sell first. That's sell to open or STO. And if you sell to open first, then of course, take the opposite side of the transaction to close it, you'd be buying to close. So those are pretty critical to understand, basic, very, very basic, but critical to understand there. Buy to open. If you do that, you sell to close. If you sell to open first, you got to buy to close second. All right, expiration. Everybody knows what that is, but that's the date when your option expires. Usually on the option, platform, the option chain, you're going to see days to expiration. Will actually tell you how many days until the option expires. You get a call option. A call option increases in value, generally speaking, when the underlying asset increases in price, right? If you buy a call option and your timing is good and the underlying asset, the stock goes up, then you'll make money. You'll have a chance to make money on that option. Or if you buy a put option, it's the opposite. You want the stock to go down when you buy a put option. And again, if your timing is good, you'll be able to capture a profit on that put option. This is where people get confused talking about option spread strategies. There's two main bullish option spread strategies. All right, these are there's many, but these are the main ones. A call debit spread is when you buy a lower strike call and sell a higher strike call. And if we have some time, I'll show you in the option chain what this is. But if you go look at an option chain, the lower strike call you buy literally is priced higher than the call option you sell. That's a further out of money, higher strike call. So what happens when you buy a call option that has more value and you sell a call option that has less value? Well, you're paying money out for the one you buy. You're bringing money in for the one you sell. And if the one you buy has more value than the one you sell, then you have a net debit transaction. You're paying more for the one you buy than what you're bringing in for the one you sell. That's a net debit transaction. That's why it's called a call debit spread. And it's a bullish strategy. It's a bullish strategy. It makes money, again, if the stock goes up, or at the very least finishes above your strikes at expiration. Depends on how you design your trade there. But that's the basics of a call debit spread. The other main bullish strategy on the put side, and people see put, they think bearish, but if you do a put credit spread where you sell a put spread, that's actually a bullish transaction as well. The way it works is, when you sell a put, you bring in premium, but you don't want a naked put. You can buy a lower striked put that has less value as your protection. You get a net credit, and then you want the options to expire at expiration. And the way they do that is if the stock goes up, or at the very least finishes above your strikes. So there's your two bullish option strategies that you need to be familiar with. They're very simple and the construct of them, but they are important to learn in terms of options trading. We use them all the time. Call debit spread, put credit spread, both bullish strategies. Now, of course, you have your bearish strategies. That's going to be the opposite. You're going to buy a put spread. It's called a put debit spread. Sometimes some platforms, refer to it as a vertical put spread debit. That makes money if the market goes down. And of course, on the call side, if you're selling a call spread, that makes money when the market goes down as well. All right, so there's your basic bullish and bearish strategies. Let me fix the slide real quick at the top. That should say bearish. Let's see where we at. This one should say bearish.
Now, if anybody's got any questions, what he's covering, type it into the chat room and he'll pick it up after he finishes talking about each slide. That way you don't sit there wondering.
Yep, thank you. Go ahead and get the slide sharing again if I can get my computer to catch up with me. Let's talk about order types for entry and exit. The next critical part here of options trading. A market order is an order placed in the market that will execute at the current best available price. All right. If you just throw a market order into the market, you're going to get filled at whatever the current price is. Now, there's a difference between, there's what's called a bid and an ask in the market. All right. Bid is what people are willing to buy something for, pay for something. The ask is what people are willing to sell it for. If the bid ask spread, the difference between the bid and the ask is very wide, let's say it's $1 apart between the bid and the ask, you're not going to want to use a market order because you'll get a bad fill. You'll get filled closer to the asking price, if not at the asking price. But you want to try to get a fill right around the midpoint. All right. And again, I'll say again, if a market is illiquid, that basically means the difference between the bid and the ask is very wide. That's an illiquid market. You don't want to use market orders for that type. All right. But the market order is your most basic order type for getting in and getting out of the market. It's great in a liquid environment. It's not good in an illiquid environment. So keep that in mind. But that's a market order. For an illiquid market, which usually options are like that. You can get away with QQQ options, SPY options. There's very liquid, but most options are on the illiquid side. You want to use limit orders for those markets. So let's explain what a limit order is. Basic definition of a limit order is an order placed in the market to execute a trade at a certain price or better. So if you're trying to buy something on a limit, generally speaking, the market's trading slightly above where you want to buy it, and you put a limit order somewhere below the current price, and it has to pull down to your price to get filled. All right. Or maybe the market's trading right at where you want to get in, but you put a limit order in the market anyways to make sure you're filled at that price or better. All right. Again, critical to use in a illiquid environment. Usually with options, you need to use limits. Of course, the other side is a sell limit. Right? Once you get into the trade, if you want to put a target out there somewhere above your entry price, you would use a limit sell order at your target and let the order work until hopefully you're filled and you make a profit. Yeah, Bob, we'll go through that. Probably not today's lesson. Bob's question is, can you talk about when you might buy a call spread versus sell a put spread? Probably won't do that today, Bob, but that's a great question, a great topic to cover in a future session, maybe this week. The next order type is important for protecting your trades, called stop loss orders. You can also use stop orders to enter the market, though. Basic definition of a stop order: it's placed into the market to execute a trade when a certain price level is breached. All right, so if a market is trading at 101 and you wanted to buy it if it goes above 102, you would put a stop order at 102. And that order would only fill if the price of that stock went up to 102. All right, so the market, in that case, the market would have to go up. And that would be termed a buy stop order. All right, which we'll get to in a second. The first type of stop order we want to talk about is a stop loss order. All right. This is usually, say if you're long a stock, right? If you're long a stock and you want to protect that stock, you could put a stop loss order into the market. Now, an important note is a stop order is not a market order type. It's a trigger. It triggers a market order type. So if you just did a normal stop loss order, let's say the stock is trading at 101, and you didn't want to own that stock if it fell back below 100, you could put a stop loss order at, say, 99. And if the stock hits 99, the stop order that you have in the market will trigger a market order. All right. So it'll trigger a market order. So you can actually have a stop market order where your stop price triggers a market order, and the market maker will take you out of the current price. Or you can have a stop limit order, which is what you would normally do, especially in a illiquid market, where your stop price, let's say that on that 101 stock example, you put a stop limit at 99. All right. So you put a stop order, your stop at 99 triggers a limit order. And if you put your limit at 99, the way it would work is if the stock drops to 99, it hits your stop price and it triggers your limit order at 99. And then if the market maker's able to take you out at 99, he will at 99. But if the price drops too fast, your 99 limit order won't get filled, right? You'd still be sitting on that stock, holding the stock with the $99 limit. And only if the price went back up to 99 would you get filled. So keep that in mind when you're using stop limit orders. But there's a difference between a stop market and a stop limit. Know the difference. And knowing the difference is as simple as understanding that a stop order is not a market order type. It just triggers an order type, and it triggers either a market order or a limit order. So that's the stop loss order. The next one is the buy stop order. I referred to this a moment ago when think about Tom's triggers. He sets a trigger on his Magic 5 or his top 10 stocks for the week. And we don't recommend you setting flat out buy stop orders there, but if you were, that would be an example of a buy stop order. If you put a buy stop at Tom's trigger, what it would do is, again, there's a stop order is not a market type order. So your stop price would trigger either a market order or a limit order at that trigger price, whatever the price was. So that's a buy stop order. We use it all the time, actually, for getting into the market. A common way to get into futures trades, breakout trades, that sort of thing. So it's an important order type to know, buy stop order. And of course, the other is the buy stop limit, right? The stop is going to trigger either a market or a limit order. Know the difference. Those are your order types. Now your time frames. The two main time frames are GTC. Actually, there's three. GTC is good till canceled, what we usually use for everything in options. There's a day order. Of course, you can use that if you're just trading intraday and didn't want to have that order continue throughout the next day. And then there's a market on close order. You'll see this on some platforms, MOC, market on close. All right, let's get into some trading strategy terms from the DTI method. Tom's trigger number. It's a price the market must go to for us to take action. So, for example, every day in Tom's T-Buzz Talk and Trade service, he gives a Magic 5 and he gives trigger numbers associated with that Magic 5. Or if you're not in TNT, you turn into the Sunday night planning session, Tom gives 10 tickers with trigger numbers. But today's trigger on Apple was 278.55. 278.55. Can anyone tell me where Apple is trading?
278.
It's at 278. So what we would do with Tom's trigger, we'll set an alert on our platform. We'll save that for another session. It'll be another good session there. But we'd set an alert at 278.55 on the roadmap or on our trading platform. And if the stock can get above that level, it will alert us and we'll know that Apple is setting up for a bullish trade. All right. Basically saying we need to investigate this further, thinking bullish. Thinking bullish. That's what the value of Tom's trigger numbers are. It's just everybody that uses them knows how much value they are. I mean, but that's what a trigger is. All right, let me see what this question that came through is.
Yeah, and in fact, if you think about AGQ, for example, I gave you a trigger it today at 110.55 on AGQ, and you go, wow, AGQ trigger 110.55. You go look at AGQ right now, it's at 114. So if you bought 100 shares of it, you're up $350. I don't know about you, but that's not $350 keeps the doctor away. That's a good one.
I like it. I like it. Yeah, and we would use reference bars, Jennifer, to, you wouldn't be getting in right now because we just hit the start of the Genesis reference bar at 11:30 a.m. Eastern Time. If you don't know what I mean by Genesis, we'll cover that in just a moment. But be aware of time of day, because if the stock triggers right before a new reference bar, you don't want to wait. You don't want to wait till that reference bar forms, or at least starts to paint a picture there on how the market behaves after the new key time of day. We covered trigger. Let's talk about all bets off. All bets are off. That is similar to a stop order, but it's not an actual order type. It's just a price in the market where we set maybe on the S&P futures or an individual stock. And if that price gets hit, that means our trade has gone wrong. So let's think about being long Apple above 278.55. All right, we might set an all bets off number if we get long Apple above 278.55. A common technique that Tom has taught and we use is if we get long intraday, well, the stock definitely doesn't need to go below the low of the day. And the low of the day today on Apple is 276.14. So we might set an all bets off number at 276.14 or maybe slightly below 276. And if we did get long and all bets off levels hit, then our trade is not working and we need to take some corrective action or just get out. All right, but that's what the all bets off is a very important level. Important to understand it's not a market order type, but it's a line in the sand that keeps you alert at what the stock is doing and how your position is doing. Targets. All right, this is real important in terms of options trading as well. And all of Tom's services, we usually shoot for a short-term target, maybe around 20%. All right, to book at least half of our position size. And then with every trade, of course, just to kind of finance the trade, book some initial profits, and then let it run as much as possible. So not every trade is going to be able to let it run. That's all right. That's part of trading. But very important, especially when trading options that have an expiration date, and actually any position you get into. We like to book an initial profit at a reasonable target for options at 20%. We found to be really reasonable. It doesn't have to be exactly 20%. It could be 15. It could be 25. But take your initial profits, get some money in your pocket, and then manage the trade, usually with a stop at entry or where you can't lose money, and just let it run as much as possible there. All right, let's see what this DTI methodology components is. Here's our reference bars. All right, reference bars, they are 30-minute candles or bars. We use candles on the roadmap to make it look easier to see. But they're 30-minute bars during the 24-hour market. They are Tom placed them at very key times throughout the day. Usually coincides with the market around the world opening or closing. And over there to the right of the slide, you can see the 7 reference bar times. At 6 p.m. Eastern time is when the futures market opens at night. The first market to open essentially is Asia. So we use RB1 as a reference for the Asia timeframe. And then RB2, we set at 4:30 a.m. Eastern time for Europe. RBX is in the morning, 7 a.m. for pre-market. RB3 is the U.S. cash open. Usually your largest range reference bar would be RB3. RBY we call Genesis because the European markets close at 11:30 a.m. Eastern time. And it's the first time all day that U.S. traders kind of can push and pull the markets where they want to and don't have any outside influence. RB4 is for U.S. afternoon trading. Tom calls it the California market. And then RBZ is the final 30-minute of the cash market hours. We call it the closing bell stretch. It's our final reference bar. Those are the 7 reference bars. We quickly went through them, but don't let that influence you to not understand the importance of these times. These are Very, very critical to our method. They're critical to understanding how the market moves on a day-to-day basis. And so take a picture of the slide or get the slides from the chat. Very, very important here. Tom's reference bar times that he mapped out for us over the years. Yeah, this is a good one, position sizing or probe. We do this sometimes in the options market with the trading services with Tom. I know he does it all the time in his personal trading. But a probe is only a portion of your normal position size. So let's say you normally risk about $1,000. A probe is no more than half of that. So if you were probing with half your normal position size and you normally risk $1,000, well, you'd only buy $500 worth. So if you had an option that was priced at 2.5, you'd be able to buy 2 of those options for $500 of risk. There's also a video there for explaining half position size, but that's a pretty simple concept, right? It's just whatever you normally risk per trade, risk at least a minimum of half of that, right? A minimum of half of that. You don't have to probe with half either. You can probe with 10% or 20%. You know, the larger your size, the more likely you're going to probe with maybe a smaller percentage size. But that's the idea of a half position probe. And then finally, let's talk about some DTI algos because we are at the start of December, a new month. So we can talk about the first 3 days algo again. FTD stands for first 3 days. It's the first 3 trading days of the month. So today is trade day 1. It happens to be December 1st, so it works out nicely this month. Start of the week, start of the month, all happens on a Monday. That's real nice. So Monday, Tuesday, and Wednesday of this week will be the first 3 trading days of the month of December. From those 3 trading days, we can set a high-low frame by taking the highest high from the first 3 days of the month and by taking the lowest low from the first 3 days of the month. If we look at, now today is only day 1, it's only a portion of it over at this point, more than half of the day, but the S&P has made a high of 68.64 and a low of 68.02. So that's the high and low frame from the first 3 days so far, but we have 2 more days after this to form. So again, the frame right now is 68.64 to the upside, 68.02 to the downside, but we have 2 more days to go. We'll see how the rest of the 3-day algo forms, and we'll have it, we'll display it, I'm sure, at Thursday's training trade, since we'll be past the first 3 days at that point. But how it works is as we go throughout the month, we have an FTD range that can be set. And then once it's set, we look for stocks to go above the FTD algo high to set up for bullish, or below the FTD algo low if we're set up for bearish. And what we found is this has worked incredibly well in terms of finding stocks that are showing strength and are likely to show strength for the month versus weakness. It's not 100%, of course, nothing is, but it works very, very well when you're thinking bigger picture for the month. And finally, on a weekly basis, we have the algo that kind of powers our Tuesday power play service called the week start high and low. Works similar to the FTD algo to start each month, but on a weekly basis. You use Monday's high and low, assuming Monday's not a holiday, use Monday's high and low as your frame and go from there for the week. If Monday is a holiday, then you'd use Tuesday's high and low to set your frame to start the week and go from there. All right, let me share the slides again. I think that's the last slide today. Today's topic was language of the markets. All important terms to know in today's slide deck, so grab the slides from the chat. Thanks for the kudos, Buck. Appreciate that.
How'd y'all like this presentation? By just, I always use this, analogy. How would you eat an elephant, right? Think about that, 1 bite at a time, right? The way you're going to learn to trade, is 1 bite at a time. And the beauty of what we did today, it was to give you you gotta know what people say when they say words, right? And I think this is going to be a great reference for you as you go further. And I want to give Jonathan kudos on this because this was really nice. If you think about the slides, you thought how professional that was done. It's very good looking. And good job, Jonathan. I mean, I was watching that. I was just in amazement how good it was. Hats off.
Oh, thank you.
All right, let's go back to, if we can, let's go look at, we got slides after this, right, Jonathan?
That's the end of the slide deck time, but we do have the replay of
Yeah.
Rob. Yep.
All right, what I'd like to do is highlight a few things. I was reminded that we run this today, which is Cyber Monday. We run this, and this is what you missed on Friday, or it's a repeat of what we did on Friday, but we copied something pretty important. You'll hear it. We had a plan coming into the day where I said I'm going to put on 4 trades on Friday, and we're going to make money.
Hey, T-Buzz, do you want the slide with just all the prices?
Huh?
You want the slide with the prices of the deals?
Yeah, put the slides. Let me talk about things because I don't want people to miss this opportunity that we're going to play the tape for. This is so good when we think about it. Okay, just put that one slide up there.
This slide.
Yeah, put that one slide, Adam. Good.
Okay.
That's why Adam's been with me almost 20 years. He knows what I need, and that's exactly what I need. But I was going to do it from the top of my head because I love this stuff, right? But one of the things that I want to do when I do this presentation, I want y'all to take a look at those prices, and we're going to talk about it. Then you're going to watch the tape. But we all want to make money. We all want to be smart at what we do. And education doesn't stop by learning one thing. I'm learning things every day. And I'll give you a little hint. This morning, I got Jonathan on the phone, and I gave Jonathan something I've been working on that is amazing. I can't, to say any word less than amazing would be, it would be being unbiased. But before I get started talking about this, I got to do one thing. All right, here's one thing. If you look, I'm wearing a Georgia hat, and this hat right here, I've searched all of Georgia, all the places you can sell it, but I couldn't get one. But at the gym this morning, another Georgia guy brought it to me. And I thought, how nice that somebody would go to the effort. We're not even real good friends. I just saw him at the gym a few times, and I was asking him questions. But if you do something like that for somebody else, it really makes that person feel outstanding, number one. And number two, I started thinking, what can I do for you and my customers and all that? And I got some stuff cooked up. But anyway, I want to show you my hat. I'm proud of my hat. But the bottom line is, what I'm about to talk about is a dream of a lifetime. And the dream is, I've always wanted to build a course about trading that would involve a weekly bite of what people need to learn. The problem is most courses get stale, okay? They get stale. And because of those courses that get stale, they're not good. So I decided in this technology, we ought to have an interactive home study course that we introduced in January. So far, we've got close to 65 topics in it already. And that's just compiled by a couple webinars we've given and also our knowledge of how to put this together. But if you think about it, if you had something that would keep you on track, discipline, knowing what to do, and updated where you could use it throughout the year, make it a practical guide to making money, then an interactive home study course would be off the charts. And one thing that gave me this idea was when I was in grammar school and I brought up the weekly reader. The weekly reader was something I got every Monday, and we work on that lesson all week. So folks, This thing is going off the shelves pretty fast because I got the price reduced to 25% of what it's going to be once we get it put together. But I want the people, the 100 people that come in there, to help us build things that I'm not even thinking about, because it is about you, okay? But the idea is that we're going to offer it today, and I think my last count we had about 40 or 50 of these left, so that's something that we're going to offer today. The other thing that I've enhanced our Futures Plus education. I was trying to think, I'm teaching you all this stuff, but how are you going to have real results from doing it? And I said, you know what I'm going to do? I'm going to have a Delta strategy every Monday night at 9 o'clock, and maybe even throughout the week, and add to the Futures education. In other words, share things with options and things that I do after 9 o'clock at night and share it with you. And I don't mind sharing it with you. And the results of that pilot program have been off the charts. But here's the kicker. If you buy my futures program today before midnight hits, you can pay $12.50. If you wait for my futures program, it's going to cost you close to $6,000. So, and a lot of people have re-upped for another years that have it, but I wanted to put it out there and let you know you ought to get on board, because this is going to be a superior futures course. You won't get anything like it in the world, because I'm teaching it, and I don't mean to be cocky about that. So I've been doing it for 40 years. I've lost a lot of money when it comes to futures. I'm going to show you how to avoid that and how to use the futures market to trade the stock market and the index market and all that. So it's really a great course that we got put together. T-Buzz All-Stars is available, my granddaddy of all courses. You can get it for 1 year, $597, or VIP $14.91. The Power Plays, we'll kick it off tomorrow. Notice Power Plays. Notice we had quite an increase in some of our prices because, folks, we put a lot of effort in this. It's well worth it. You ought to be part of it. Now, this is really what shocked me. All this training we've been doing in the last 30 days about the roadmap and how we use it is starting to make sense to people. And I just got off the phone this morning talking to my programmer, and we're going to have the new programmer out in the next few weeks, the new program for the roadmap software. And if you want to have the roadmap software for the next year, all you got to do is get signed up, get the current version loaded. But we've got some real things that's going to cost you a lot more money to get once the roadmap is released. So that's out there. Sawgrass workshops, people are still signing up, some of the new people, for our annual get together. Charlie's Room is advanced option trading. The Weekend Profits Club, it's the last trade we make every week. In fact, we made one on Friday, or Wednesday, I think we made it. Wednesday, and we're getting close to, we'll be taking profit this week, the way things are going. One ticker payout, I call that, it's like inventing the light bulb. That's track record. Nothing's like it, but it sets up. Genesis algos, what we're in right now, I'm trying to program a lot of these signals. MTI by DTI will give a $250 credit you can use towards anything else. You get the lifetime deal, MTI by DTI. Sunrise signals, $12.97 is sort of the sun of Genesis, I call it. You need both of them if you got it. The anchor trades, we released it in the last 10 days. It's a big hit. People are already on scholarship. It comes out about this time of day. Get signed up for that. And what I did, people tell me all the time, the way to stay involved, even if you're in and out and all that, is be a subscriber to our T-Buzz Talk and Trade. A 1 month subscription is $200, but I'm doing a BOGO today. You buy 1 month, you get 2 months. And then, of course, our gold program will change after today. If you want the original gold program, which includes all these classes and everything else, you got to get it bought today. If you spend 10 grand, you get a laptop computer. Any questions before I play the tape? Carol said she knows she gets results. Her retirement account has doubled since she signed on to go. Okay, that's pretty strong. Thanks, Carol. Amazing education. You're gonna love the interactive home study. It's coming sooner than we think. I need to get that 100, and we'll start having our webinars to build it. It's gonna be great. So any questions before we go to the live stream? Don't get too excited if you listen to the live stream, because I'm talking about a little trading in there too, but don't get too excited about that. All right, anything else? You ready to play it, Adam? Thanks for doing this.